Good morning, everyone. Thank you for taking the time to be with us today. My name is Joe Corio. I'm the Senior Vice President here at URL Insurance Group. And first and foremost, for those of you who have done business with URL, thank you for your continued support. We definitely realize that you have choices as to where you place your business, and we truly appreciate you working with URL. For those of you who are new to URL, welcome. We are a full-service broker offering a complete line of annuities. That includes both fixed and indexed, single premium life products, traditional life products, health products, a senior care division for Medicare Supplement and Med Advantage, and an employee benefits division. Please feel free to check us out on our cutting-edge website, www.urlinsgroup.com. As Senior Vice President here at URL, I oversee the annuity and single premium life division, and frankly, the fixed annuity business has been booming the last 2 years. It's really been exciting for us. Last year was a record year for URL, thanks to your efforts, and I think people are finally realizing the benefits of upside potential with no downside risk that they get with indexed annuity products. There are also some very creative income riders that have helped to fuel the annuity sales. URL offers annuity and single premium life plans from a variety of carriers, all of which offer products and services that will most likely be able to fill all the needs of your clients. Today, however, we are pleased to be able to focus on a carrier that we've been working with for many years, F&G Life. F&G's sales have mirrored the industry recently. That is, they are growing by leaps and bounds. We are lucky to have with us today Dustin Carlson, a senior internal wholesaler with F&G, who will be presenting for us. Dustin has many years experience in the business and is going to share some ideas with you that I'm sure most of you are not aware of. So hopefully his presentation will motivate you to look at F&G as a possible source for your next annuity case. Now, if you have any questions as we go along, on the dashboard on your computer screen, there is a question area where you can type them in, and we'll go through them at the end of the presentation. So without any further delay, I'll turn the program over to Mr. Dustin Carlson.
Well, thanks, Joe. I appreciate everyone being on the call today, and obviously the continued partnership that we do have with Joe and his organization, URL. Joe, I just want to make sure that you can see my screen.
I can.
Okay, great.
Okay.
All right. Well, so yeah, once again, thank you for your time. I know it's precious, and everyone wants to get out there and sell, but hopefully you can take some benefit from this. I'll talk a little bit about product, but also I want to focus on some pitches on products, some sales concepts, and some benefits to the advisor for doing business with us with our fidelity and guarantee perks. For those of you who haven't done business for a while with us, or maybe you're new to F&G, we were a B++ rated carrier for a while. You know, we had a different ownership group that had us up for sale for quite some time, and we were sold to a United States organization, and now we are a publicly traded company. Excuse me. So the rating agencies were excited about that, and they gave us our A- rating in record time, less than 12 months. So we couldn't be more excited about that. Obviously, we've had the financials of an A- rated company. The product's always been there, but now with the new ownership, providing stability, growth, and just we want to focus on a better overall experience for the agent and their customer. With that in mind, we felt like we needed a rebrand, and as you can see here, I don't know about you, Joe, but when I looked at this slide for the first time, it took me about 10 to 15 seconds to find F&G's logo in there. And as the slide indicates, we're all kind of swimming in a sea of blue here. So With that, we launched a rebrand in March, and as a Bears fan, I reluctantly, had to sign on with the Vikings colors, but it's since grown on me. And really, I think we've only received positive feedback from the field on this. It's client-friendly, better material overall as far as brochures, and really becomes a sales tool for agents to be able to use to put in front of their clients and really have a quality piece. And here's a quick example of the old and the new. So if anybody needs any of that material, reach out to Joe and his team, and they'll be happy to provide you that. So as far as our product portfolio goes, typically we're top in comp or right at the top. We are top in guaranteed income, and we have some of the best performing income and accumulation in the market. Here's our product matrix. We don't have to go through everything in here, but just know that we have great accumulation rates, our performing income. We have something for everybody there, as well as the guaranteed income with the Safe Income Plus being our flagship product. I'd be remiss if we didn't talk about our MYGA. And Joe, I think you all do a decent amount of our MYGA business. Is that correct?
That is correct.
Yeah, and I think in large part it's due to that 5-year rate that we've been able to maintain for, I think it's been about 12 months now, 3.7 for 5 years, and it only increased as far as premium volume once we got that A- rating. So we're the top carrier at 3.7 A- or better. One thing that I'll touch on, we do have access to, or you have access to our Barclays Trailblazer Sectors 5 Index. It's a 2-year strategy that focuses on getting clients consistent, reliable returns. You'll see this amongst many of the products, at least 4 products in our product suite. So keep that in mind as we go through a couple of our products here. Like I mentioned, consistent returns, they're managing between 4 and 7% is their goal. And so far, this has been in existence since November of 2015, and they've been able to keep it at 4.39%. And as you'll see in a few slides here, we do offer participation rates of up to 160%. So we're going to multiply that 4.39 times 160 in a couple of our products. So moving forward, our accumulator product. Now, Joe, it's been my experience over the last couple of years, especially in the last year or so, we've seen income products where it used to be an 80-20 mix, income to accumulation, go to about 60-40. Is that what you're experiencing on your end?
Definitely, we're seeing more accumulation needs.
Yeah, and I think one of the things that I like about accumulation is it's used to curb the sequence of return risk, where I've seen agents and advisors pulling 2, 3, 4% withdrawal rates out of them, and still providing that guaranteed floor of 0% loss, or I'm sorry, of any losses. So they're using that withdrawal mechanism there to really help customers fund their retirement without having to purchase an income rider. And I think that's one of the trends that I've seen. Obviously maximum accumulation for death benefit, and I'll show you a quick sales idea here regarding RMDs in just a minute. But our Accumulator Plus product, if you're looking at this product, you'll see it has a 7 and 10-year option. The 7-year has basically the same rates as the 10-year, so not much fall off there for your clients choosing a shorter term. It issues up to age 85, which is pretty good for an accumulation product. And furthermore, we do have access to the Barclays Trailblazer at 160%. And how we get there is buy-up options and paying a 1% fee to get to that 160%. Other than that, there are no fees in this product. It's strictly accumulation. And I did want to mention that bottom bullet point there. We have a home health care rider, which many of our competitors do not. So this would be an advantage for us going into a competitive situation where, most carriers do have a nursing home and terminal illness waiver. We actually have a home health care waiver where, let's face it, most clients want to stay in the home if they can possibly do so, and our annuity gives them the ability to take their accumulation value without MBA or surrender charge after the first year if they cannot perform 2 of 6 ADLs. So I believe that's fairly unique, and Joe, you can correct me if I'm wrong there, but I think that would be an advantage of our accumulation story over our competitors.
Yeah, I don't think we have another carrier that offers that home health care rider.
Great, yeah, and and it's a waiver. There's no charge for that. There's no confinement necessary. All it is the 2 of 6 ADL. So once again, if you need any more details on that, Joe and his team can help you out there, or you can always defer to me as well. Quickly want to touch on the current rates, and we do have a monthly point-to-point. I've seen a number of advisors asking me for illustrations with monthly point-to-point. I think it has to do with the low interest rate environment we're in, and that gives them the most or highest potential, around 20–25% returns. But as you know, one bad month could wipe that out. So keep that in mind. But do know that that's an option that I'm seeing more and more. Your traditional S&P, the Barclays, and our declared rate on gain. Now, all of these have a buy-up feature. So, for example, in the S&P 500, annual point-to-point, you have a 5% no fee, so that's our current cap. If the client wants to pay a 1% fee to buy up those caps and rates, they can get 7.5%. If the client's not happy with the 1% fee after the return that they get that first year, they can always turn that off on anniversary and then turn it back on in subsequent years within that surrender charge period. If you like illustrated returns, we do have the 100% in the Barclays here. It's illustrating at 8.47% currently. The low end is illustrating at 7.21. So I just wanted to show you that part of the illustration. Typically, as a sales team, we recommend a blend with the S&P 500. So that way you can at least see a return in the first year, typically anyways, as long as the S&P performs. But it is a 2-year strategy, so if you put 100% in there, the client won't necessarily see a return in that first year and could cause some confusion on that first annual review. So here's the RMD sales solution that I was talking about. This is a great way to show you how to grow a client's legacy retirement dollars and their account value, all while taking RMDs. Best way that I've found to show people what I'm talking about is the illustration. So first of all, we have a $100,000 dump in at age 60. We're letting that grow for 10 years. That account value on that first arrow shows $145,275. Client has to start taking RMDs at 71, of course. So if you look at the RMD column or that second arrow, you'll see that the client's taken out $61,173. The column next to it is the account value, and that's still at $137,886. So while they've been taking $61,000 out in RMDs, we've been able to keep the account value afloat and still provide them $37,000 worth of gain from that original $100,000 deposit. And I think that's a strong story, and we may be a little bit late on the take here because tax time has came and gone, but this is still a relevant conversation to have with clients to kind of spark some interest in a product like this. And I guess one other thing I'd point out is that accumulation value, of course, is the death benefit. So anytime that customer would pass away, that is available as a death benefit in that far right-hand column. So performing income. this product here, the Accelerator Plus 10 and 14, has been getting a ton of traction with us. It's our fastest gainer as far as premium to one product goes. We're talking about interest credits and a simple roll-up being credited to the income base. I'll show you what I mean here in just a moment, but let's get to the key selling points. Just a couple things to point out. It does have a performance multiplier, which is sort of a fancy way of saying we have a 5% simple roll-up. It grows at 5% per year up to 10 years. We do have the Barclays index available and the buy-up options available as well. And Joe, I don't know what the average cost of a GMWB rider is. I believe it's right around 1%.
Yeah,
this one,
correct.
One of the cheaper ones. Okay, good. Yeah, this is one of the cheaper ones that I've seen at 80 basis points. If your client's fee conscious, this is a great pivot to go to if you're looking for an income rider. Now, it does have a premium bonus of 7 and 8%, depending on if you choose the 10 and 14. But one of the things that I like about this is it does have the income doubler to a 6 ADL based with no cap on the years that the client can have that benefit. As long as there's cash value in the contract, they'll get double that payment, and then it just reverts back to the original payment that they were receiving. Now, I know there's a decent amount of people from Pennsylvania on the line, so I just wanted to point out that it's not available in PA, but I'll give you a sales idea that maybe we can get you to do some cross-border sales if you have an office in a surrounding state, and I'll show you that here in a few more slides. In addition, strong compensation to the agent. You can talk with Joe and his team about that as well. Here are current rates, and as you can see, there's not much fall off from our accumulation story, which isn't necessarily the norm in the industry. So whereas on the accumulator it was 5%, the Accelerator Plus 10 has 4.50% in the S&P. Once again, you can buy up those caps. I know there's a lot of columns on this illustration, but I wanted to make sure that I got the point across about the performance multiplier. I think it's important to show that. So bear with me here, but I'll just show you a few columns. The first column I want you to look at is the account value. It's about 4 or 5 from the left. That account value gets interest credits every year that there is a return in the allocations that the client has chosen. Now, I did allocate to the Barclays, and this was going back to 2007, which had no returns really in any index anywhere for the most part back in those days. This illustration's 07 to 17. But, what we're doing is we're taking the account value and we're looking at the performance multiplier column. As you can see, that's growing at 5% per year up to 10 years. And we're multiplying that value to create the income base and then multiplying that by the payout factor. So, for example, at year 6 of the contract, age 66, this client has an account value of $374,000 from a $250,000 dump in. We are multiplying that by 30% with that performance multiplier, creating an income base of $487,268, and then multiplying it by the payout factor, which you see in any other income rider product, creating the income withdrawal payment for life of $24,363. And oh, by the way, there is a doubler, and that's what we're illustrating in the next column over for $48,727. Joe, does that make sense? Can you follow me on that?
Yep, it makes perfect sense.
Okay, great. So just want to touch base on this. It does have the income doubler, not available in PA. The rider fee is 80 basis points and very competitive accumulation in it as well. Now, Many of you may be familiar with the Safe Income Plus. If you've written us before, this is our flagship product, the highest guaranteed income in the industry. In most scenarios, typically in other scenarios, we'll battle it out with our friends over at American Equity down the street, but we're typically at the top 1, 2, or 3. So I've been told from marketers on Annuity Rate Watch and some of the competitive intelligence that we do here. But the key selling points of this contract and why it's so strong is we provide an upfront bonus in this product, not only to the accumulation side, but also the income base. It's 7% in PA for you on the phone from PA, but 7.5% compounding roll-up as well. And two key points that are somewhat ignored are the age banding of the payout factors. Ours increases every year by 10 basis points. And daily crediting, I want to unpack that just briefly. Daily crediting in this product can separate us from our competition if you're spreadsheeting us out on guaranteed income, which it is a spreadsheeting game to a certain degree. So what does that mean? You know, most carriers, including us and our other income products, will go back to the previous anniversary to determine that income account value and pay the client for life. Well, with our contract and the Safe Income Plus, since we do daily crediting, you know, most clients aren't going to activate income on the anniversary. They're going to do it when it's convenient for them or they need it or whatever it may be. So we have the ability to illustrate year 5, month 10, and tell you exactly what that income payment would be, that account value would be, which if you're spreadsheeting us out, we may be off 1 or 2% from our competitors, but we'll make that up by being able to add that daily crediting into the account value and give the client a higher payment.
Hey, Dustin, just a note on that. When we spreadsheet the companies for payouts, like you said, you're usually either 1, 2, or 3. But if we're looking at like year 5 and 6, almost all the time this product is coming out on top.
Okay. All right. Well, that's good to hear. I guess if we're ever not at the top, just ask me, or anybody on the phone could ask you for an illustration.
Right.
Because our illustration software cannot get down to the exact day, but we can get as close as to the month. And we can show you what it would be at that point, and then go back to that spreadsheet and right. See where we would end up.
And what we're finding is most times when you take the application, the client really isn't sure when they might exercise the rider, but we find that they try to hold off as long as possible, and because they know it's going to grow. So that's where I think your product really shines, is if they can hold off, they're going to have one of the best payouts in the industry.
Yeah, definitely. And, I feel like, right at around 3 years, it really starts taking off and being number one. I mean, we have other products where if you're turning on income, day 1 of the 2nd year, it's competitive because a high bonus. But Safe Income Plus is the number one product for a reason. So keep that in mind. And I guess one thing I'd mention about the Safe Income Plus and a conceptual type selling idea. The second bullet point on that slide is playing with house money. And you can use whatever scenario you want, but the one that I use to kind of get the point across is, you take $1,000 into a casino, aka the market, and you win $500 with your AUM, right? So you're up $500. Why not send that $1,000 with your wife or your husband out to the car, put it in the glove box, save it, and just play with the money that you came with, or vice versa, just play with that $500 that you won and take the $1,000 back to the car. It's one of those things where, if you don't leave the casino with those winnings, they're never really yours. So what I'm saying here is you can build in your retirement floor with the money that you came with and really build that floor, and maybe play with the money in AUM or the market or a CD or whatever you have. But the Safe Income Plus is a great way to really round out the floor of the portfolio so that you don't lose any money and you have a little bit of upside with that roll-up and premium bonus. Once again, the impairment doubler, not available in PA, but a quick example here that you could show clients. Joe, I could always send this to you if you have anybody that needs a quick illustration to show a client what that looks like with the infographic here. Key features, 2 of 6 ADLs. Of course, the home health care waiver that I talked about, that does qualify. The client can stay in the home. That's a huge selling point of this impairment doubler. They don't have to be in confinement for 90 out of 120 days or whatever it may be. So that's a big selling point in my mind. Furthermore, there's no 5-year limit on our doubler, whereas most of our competitors will say there's a 5-year limit or a 10-year limit. As long as there's cash value in the contract, we'll pay that out. And I've seen some illustrations lately where it is in that 10, 12-year range. And lastly, I don't know if we have anybody on the phone from California, but that is available in California, and could be a differentiator there for you in that state, since most carriers' products do not have that doubler available. A couple quick sales concepts that I promised. This is one where I used the Safe Income Plus again. Obviously, this isn't anything groundbreaking as far as timing. Timing is everything, though. When you're talking to customers, we've been on this great bull run for how many years? There's, in recent memory, it's easy for people to forget 2002 and 2008 and 9. I personally have not, and it's a great opportunity for you to remind customers that, hey, you don't have a crystal ball, but there's a potential for risk out there and another drop like we had before. And what better time to talk to your targeted market about protecting and providing some growth. When I'm talking to agents and trying to relay a sales concept to them about this, typically I recommend showing some market performance, and this is the S&P as of March 29th, going back 20 years. But it allows the customer to see the ups and downs and the continued growth. But obviously we've experienced periodic declines. So if you have someone wanting to retire back in 2007, let's say they come to your office and they're all set to go for retirement in 2010, 401k looks good, their AUM looks good, whatever it may be, they probably left your office fairly happy. Well, what if they came into your office on March 6, 2009? I mean, this is a little bit exaggerated, but these are real numbers. They wouldn't have been able to retire in 2010. They may still be working now, but if we were able to provide them a Safe Income Plus or a guaranteed income product with another company, you would obviously be able to have a much better conversation with them about that guaranteed floor that you provided them. No downside risk, only growth, and they could turn on that income for life at that point when they wanted to. Another sales idea, and I mentioned this earlier, we do allow virtual sales at Fidelity and Guarantee. So if you have a client in New York, New Jersey, basically any other state, I don't think I'm looking at the sheet now, yeah, there's no restrictions on which state. But as long as you satisfy our face-to-face meeting requirements, which is taking a video of the meeting with the customer, the customer must have Skype or FaceTime or whatever you use. You must record that conversation and also take a still picture of the client with their state-issued ID, which would satisfy our U.S. Patriot Act requirement that we have for compliance. But other than that, the only other thing that would come up is you need to be licensed in the state that the client is in, because that's the paper that you would need to use. And it works really slick if you are able to use our EAP software. Otherwise, we allow you to use our paper applications to do this as well. And I'm not familiar with any other carrier that does allow this video type meeting, virtual meeting. I know it's heavily used on the life side, so some of you life producers on the phone may be able to take advantage of this as well since you're already used to it. Here's an oldie but a goodie, and Joe, I love this one with the arrows because it's as simple as you can make it without mentioning the word annuity in a sales presentation. You know, if you were sitting with a client and you said, all right, envision your retirement dollars and 3 arrows, one going up, sideways, and down, you know, and your money could do one of those 3 things or 2 of those 3 things, which would you eliminate? And 10 times out of 10, they're going to eliminate the one that goes down. And that's an annuity sale right there, because our annuities provide that downside protection and upside growth. One other quick sales idea. This is a picture of my dad and I playing golf actually a couple of years ago, but the reason I bring this up is not to show you a picture of how ugly I am, but to really show you the power of a personal story. And I know some of you probably use personal stories to help move people emotionally to make a sell and really help your customer out. I know some reps have gotten away from it, and I've offered some personal stories that I've had to help them out, and it's really brought them some success on closing business. You know, for example, my dad, we love to play golf. He's going to be able to play a lot more golf. He just retired from Burlington Northern Santa Fe Railroad after being there for 30 plus years. And one thing about the railroad and working there, they have access to a traditional pension. So he's known what his pension payment is going to be for a few years now. And when he retired on his 60th birthday on St. Patty's Day this year, basically that was his last day in Iowa, where we're from. He moved down to New Smyrna Beach, Florida with my mom, and he's been playing a ton of golf ever since. So, you know, what we have the opportunity to do in the financial services industry, specifically the FIA side of the business, is offer customers who don't have access to a traditional pension plan but are looking for a stable retirement, a stable paycheck outside of Social Security, to really drive the point home with a fixed indexed annuity and the benefits that they offer. So creating that personal story really helps, in my experience, close business. One other quick sales idea for you here. I know I'm running out of time, but this is a good one. Now we have a list that exists like this, and I can provide this to you, Joe, so you can distribute it if you want. But it's a great way to create a new niche with new prospects and create a new revenue stream for you. So what I'm talking about here is in-service distributions. Clients must be 59 and a half. Per government regs, but typically companies have their own plan documents that say you must work at the company for 2 to 5 years and have spousal consent. But the idea is to, you know, capture 401k dollars that you typically wouldn't have access to. Before a client retires, you can do 401k rollovers with them, even if they are currently at that employer. So gathering those assets early and helping them develop that pension paycheck that they're looking for without hitting that retirement date. And, you know, my pitch on this sales idea to reps and advisors is basically, you know, what if I could provide you a list of national employers who allow early access to 401ks? You know, would you be interested in talking to their employees about 401ks and the rollovers? Better yet, what if I could provide you the list of employees, their ages, have a potential warm intro, and a way to directly connect with them for free? Would you be interested? And I think most people on the phone would be at least interested to hear what I'm talking about and the idea and getting their hands on that list. Here's what I would tell you to do. I'd tell you to pull up your phone or on your desktop, pull up your LinkedIn app. I'm assuming most of you are on LinkedIn. Search PepsiCo, for example. That's one of the national employers, and most cities throughout the country have a PepsiCo located there. In this example, I pulled up, let's see, 1,028 results. Dawn Losgard is who I chose. I'm actually connected to her via 4 people. I've never met Dawn in my life, but she is the manager of operations and sales, so probably makes a decent living. You can look at her experience and see that she's obviously a manager at Pepsi, but also see her former employers. Maybe there's some low-hanging fruit there with some old 401ks that are at those employers that you could get a rollover situation on, prove yourself, and maybe roll her PepsiCo when it becomes available. You can see her age, and it got cut off a little bit here. Sorry about that. But you can see her age or approximate age by her education and when she graduated from high school or college. And lastly, in that upper right quadrant, you can see the 4 mutual connections I have with her to get that warm introduction potentially. And then it'd be up to you to create that 30-second pitch that you want to message her with to connect and offer her your services and how you may be able to help her with her retirement. So Joe, I can always send that to you after the call, but we do have a list that has been gathered by a number of financial advisors throughout the country, and that list has been vetted by the organization that they provided those lists to.
That'd be great.
Okay. So perks. I'll run through this fairly quickly, and Joe and his team are pretty much up to speed on this. Our Power Producer program. This is our deferred comp. It's of no contribution to you other than we ask for $1.75 million of fixed indexed annuity premium a year to stay in the program. It is a 6-year vesting period, and you can miss 1 year in there, and that is forgiven. We will continue to credit you during that 6-year period, even if you do miss that year. So what does this all mean? Well, we establish an account at Principal Financial Group on your behalf, and we make those contributions to this retirement account. And how you earn credits is through production. The minimum is $1.75 million, and every $1.75 million above that, we give you another credit. So in this example, we have qualifying year 1. That credit is typically between $3,000 and $5,000 per credit, which may not sound like a lot for $1.75 million worth of production, but hear me out on this. $3,250 is credited year 1. If you look at qualifying year 2, you'll see that $3,250 on there again, plus the $3,750 that credit was worth in year 2. So why do you see that $3,250 again? Well, that's a persistency credit. So as long as that business stays on the books, we will give you credit for that every year that it remains on the books and you're in the deferred comp program. As you can see, it stays on for 6 years there and creates quite a multiplying type value for you. So if you're doing the minimum and earning the credits that they're displaying here over a 6-year period, you'd walk away with $76,500. To drive this point home, I'd encourage you to reach out to Joe and his team to get access to this calculator. It's a glorified Excel spreadsheet is all it is. We want you to enter in the amount of annuity sales that you think you would be able to do with us. And I'd point out here that we're using a $3 million example. The hypothetical interest rate is what you could earn on your account at Principal Financial Group. We do establish an account there that has access to 30 different funds that you could try to maximize that interest rate. I think 4% is a little conservative, but nonetheless, in this example, that $3 million got you 1.5 credits. And over a 6-year period, that would have earned you $117,901. At the end of 10 years, that account would be worth $326,334. So if you have at least 6 years left in the business, or if you're a younger advisor just kind of getting into the business and don't have access to a 401k, this is a great option for you. Like I said, $1.75 million to get in, and it's a great program. And reach out to Joe and his team if you do have any questions on how that works. I'll point out we do have a trip to Costa Rica in 2020 based upon 2019 production. It is $3.5 million to qualify. And for you life producers out there, we do have a life division. many people may not know that because we were B++ rated, and I know ratings weight heavily on that side, but we are incentivizing the life production. It's dollar for dollar on the annuity side. It's $1 for $15 on the life side. So to wrap it all up, we have the strength and stability of an A- rated carrier. We are not stopping there. We are going for the A, and hopefully we'll be there in short order. We have leading MIGAs, accumulation, and income solutions for you. And we do have perks for the agents out there that do business with us, because we appreciate every dollar that comes in our door. So our Four Seasons conference in Costa Rica, as well as our deferred comp. We also have a premier service team. You need to be doing around $2 to $3 million to get access to them, but they will basically give you the white glove treatment on new business and policyholder services. So Joe, I guess with that, I appreciate you taking time out and allowing me to speak to the group here. And once again, we appreciate your partnership and everything that you do for us. So thank you very much.
Okay, thank you, Dustin. Great job today. I don't see any questions here, so I think that'll end it for today. But as always, please feel free to contact us at URL. My team of Maria Adams, Jason Collins, and Cody Wilbert will be more than happy to assist you, or of course myself, with anything that you may need. So thanks again, everyone. Have a great day and happy selling.